Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on a market that is neutral to slightly positive. You can see today we opened slightly higher, went sideways, we floated just a little bit. The spiders are up 35 cents on the day, so again, it's not a big move by any stretch, but nonetheless, we are positive at this point on Friday, and it's just about 11:30 a.m. Eastern time, so just before lunchtime, 12 o'clock. Now, the S&P 500 is up 3 points, Dow's up about 54 points, NASDAQ is squeaking out a 5-point gain on the day. Couple interesting things about the spiders. So really the last 3 days have been up, and away. That was leading into Janet Yellen, which was on, obviously, Wednesday. Thursday was when Janet Yellen testified, and then Friday the day after. And markets, again, today of all days are looking a little bit weaker, but with the light volume that we're seeing here on a Friday, especially Friday afternoon, it's hard to imagine that the markets will really see that much downside, if at all. So again, generally light volume days, you think neutral to slight upside. Based on the massive move up the last couple days, I really do think it's more of a flattish day, maybe up or down just a couple pennies on the spiders when all is said and done. Today is also options expiration, so there could be a little finicky action going on with certain stocks into the close today. Now, one little trend line I want to just point out to you is a trend line that shows that we are now below trend. All right, now this is just a short-term trend line stretching back a couple days, but it does show me again that there is some potential weakness coming in next week. And again, I'm not talking big weakness at this stage. You have to see a big reversal signal for that to be even an option after, the last couple days in this market. But notice if you take this low pivot right here connected to this low pivot, really these two. So you have this low connected to this low, connected to this low. If you stretch that all the way through, you hammered on it right here, and you broke below it right there. You then retraced and hammered on it to the upside right here, pulled back, again right at the open and pulled back, and now we could see we're starting to inch down just a little bit. So these type of things, it's nothing major, it's nothing earth-shattering, but more as a day trader or an intraday analyst, these are the things you pay attention to because it does show a shift of momentum to the upside where you're on top of the line bouncing, to now being below the line where when you hit it, you're pulling back. And again, notice how the market is now away from that line. Will we float up later today, retest it, or will we come in and start to pull back just a little bit more? And again, that's the big question when all is said and done. We'll find out today. Couple other things to go over. I have a couple stocks I've been watching intraday. One I think is worthy of a major mention today, and that is Amazon.com. All right, now Amazon.com here, the reason why I bring it to your attention is because not so much the intraday. I mean, the intraday is kind of cool because you see a wide range bar, and then if you draw this trend line right here, if we ever close below this low, then it's a negation of inside bar action and a failed pattern. But the bigger thing to me is the daily chart on Amazon. All right, this could be an epic topping signal for this stock. Now, we all know this stock makes basically no money, but is valued at, I don't even know how to value it at this point. And most Wall Street people don't either, but it's just a momentum play that keeps going up and up and up. So the last 2 days, huge moves to the upside. Today, we made a new all-time high on the stock, but what do we know that is? That is a topping tail so far. Now, I want to stress this. A topping tail at 11:36 a.m., which is the time right now, doesn't mean it's going to be a topping tail at the end of the day. The key is the end of the day, how it looks. Okay? That's the key. How does it look at the end of the day? And look at it fall. Just went negative on the charts, guys. Just went negative. We're now basically at the lows of the day here. So listen, if this closes with a topping tail, mark my words, you have a major top in Amazon in place. Okay? So this is what we're following now. Could be humongous. Now again, listen, it could rally by the end of the day up 3-4 points, and then you don't have a topping tail, and then who cares? Doesn't mean anything. Doesn't mean a hill of beans. But again, just this is catching my eye. I also think that the volume for a Friday is relatively heavier than I would have expected, which also tells me that there's distribution, meaning essentially when it popped, institutions sold into it. All right, so let's watch this very, very closely, guys. Could be something major. All right, couple other charts I want to bring to your attention. Google's down a little bit, Apple's down a little bit. Apple continues to me to be bearish on the chart. All right, now yesterday it had a nice up move, which was very nice, but overall you still have this wide range bar right here. And unless you take out the high of that wide range bar, this is engulfed so many days prior that all this action is bearish in between. You had a little bear flag right here, you broke down, and then another flaggish pattern here, and I expect the Apple to actually move lower. So just keep an eye on that. I think at this stage of the game, unless again, then the key is to recognize that if you close above here, then yeah, then Apple could honestly go to $600 per share. But honestly, right now, all bearish across the board from what I'm seeing. Absolutely bearish. A couple other stocks in motion today. A couple big players, big hedge funds players, announced that they had accumulated positions in certain stocks. Warren Buffett picked up ExxonMobil. What do we know the daily chart on ExxonMobil is showing us right here? Possible topping tail. So yeah, it was a great gap up on Exxon, but you know what? Topping tail alert. Now, one thing I want to mention, guys, when you hear from the Warren Buffetts, the Lobes, the Ackmans, the icons, when they tell you they're in positions, they've already accumulated them a long time ago. So when you get the amateurs jumping on board, I almost look at that as a reversal, as a topping signal on a lot of these. And I think no better example than with Exxon. I mean, look at Exxon here. So Warren Buffett announces, goes up and pulls back, and there you go. This is distribution 101, guys. Distribution, which again is where institutions distribute to the amateurs that get all excited because Warren Buffett bought something, so they jump in, and they jump in at the highs, and then wonder why they lose money day after day, week after week, month after month, year after year. All right. Another stock that happened on was FedEx. Now, FedEx is actually holding up relatively well so far. It's off its highs, but again, same thing. Another announcement that another big investor, big hedge fund player, accumulated a stake in FedEx. This chart is ridiculous. I mean, this chart is going to come in. There's no doubt about it. The question is just when, but it will come in and come in quickly when it does. So just a heads up on FedEx. Already had a beautiful pullback here. Because of this announcement, they were able to pop it above the double top, which got the little short covering. But this thing will come in, folks. There's no doubt about it in my mind. Absolutely no doubt. Okay? So these type of announcements, and I find it fascinating that into today we had a bunch of these announcements on different stocks because it almost does mimic a possible top, in some of these stocks. Now, in the overall market, I'm a little more skeptical, right? Now, as I told our members, you confirmed above the previous major wide range bar. That happened 2 days ago, and then we're now pushing up a little bit more here on the spiders, and you can see it better on the intraday. So the intraday, again, the last few days has really made a big move up. And again, we confirmed a couple days ago above that, which I said to our members, yeah, all right, so if you confirm, you got about 2% upside, maybe 3%, somewhere in that range. That's it. But ultimately, the key is to recognize that the risk reward is definitely to the downside at this point. All right, and there's no denying that. I mean, that's just common sense and logical nature. And emotion will drive the markets in one direction too far, in the other direction too far. But when you just look at something logically and you take the emotion out, you just can look at a market like this, and you can see even the spiders are coming in now as I speak. But I mean, just look at this chart. If I just zoom out, I mean, just from 2013 alone, you're up, 30%. All right, and if you go back to 2009. The lows in 2009, you're up almost 200%. The economy still has, 7+% unemployment. Growth is minor. We saw some more economic news. Now, granted, the Fed has been, jacking the market up with steroids nonstop. And, it's so funny to hear Janet Yellen yesterday kind of be like, oh, we don't see it that way. We don't think the market, blah, blah. I mean, hey, listen, a blind man can see it. So, they just obviously can't admit it. And listen, I'm not surprised they can't admit it because, this is what they've banked their whole. I mean, the reputation of the Fed will be built off of what happens based off all this money printing. All right, when you get a major collapse, which is inevitable, maybe they run the markets another 15-20% higher. Who knows? I mean, anything is possible if they pump enough money into the system. But at some point, you will have an epic collapse in the system. And I've said this before, and I'll say it again. There will be talk about indicting the Fed, people at the Fed. Now, this is still 5 years out, 10 years out, but there will be a point where there'll be some major investigations. Now, I don't think anything will come of it because they're well within their right, I guess, to do what they're doing, but there will be calls for it. There will be talk about it at one point in the future. So, it's just one of those things where, they're trying a thesis here that has never been proven, and they're hoping that they're right. They're basically hoping. And then Janet Yellen even said that yesterday. She's like, this is what we've done. She was asked basically, do you guys have any proof that this is going to work and we're not going to have major issues because of this? And she basically said, no, I mean, this is what we believe, and that's it. It's our opinion that it's going to work out. And, Congressman had to take it at what it was. It is what it is. That's what they say. That's what they say. I mean, it's their opinion, okay? Now ultimately, I don't think I'm necessarily smarter than by any stretch, but I do see that the Fed has created every bubble. I'm surprised they don't see that, and I'm surprised that they think this, monetary type policy is any different than what they did after the tech bubble burst in 2000 to create the housing bubble. And now they're just doing it 10 times over, maybe 100 times over, which will only create a bigger bubble. So these type of things, very, very important to recognize, folks. I don't mean to go off on a tangent on that, but spiders, again, let's just go back to the intraday. Spiders have pulled back, and we're now into the 20 MA, just up 24 cents. We'll see if this market comes in a little bit more. Amazon, again, guys, I think this is the gem of them all. I really have to say. I think Amazon's the gem of them all. It's into the 50 MA, so you have a little bit, but notice how you closed outside of this bar now, so that's failed. If you break this 50, this Amazon could start to decline even more. But I think the key is today, look for a topping tail on that. If you get a topping tail, I think you have probably a multi-week, multi-month high in Amazon with downside potential. For those of you that want to know a general target on this, I would say gap fill right here. 50 MA will slope up into it. You're looking at gap fill right down here, which will be right around the 332 level. So about 30 plus dollar decline, which is about 10% drop. All right. Have a great afternoon, great weekend, guys. Remember, there's a 7-day free trial here at InTheMoneyStocks.com to the Research Center if you're a swing trader and investor. That's where you want to go, bottom line. All right, so come join us here at InTheMoneyStocks.com. Take that 7-day free trial. Start profiting. If you take the free trial and I like Amazon at the end of the day, I'm going to take it and post it. Okay? Talk to you soon, guys. Take care.